Mr. Mecklai, thank you so much for speaking with us at NDTV Profit. There are some reports doing the rounds that there is about $10 billion of unhedged forex positions. Given that FCNR redemptions have been going on for the last few months, in the month of October and November, there are some unhedged gaps there. Is this very worrisome? Can you explain this to us? Because we would think that the RBI would have covered, would have hedges all along, anticipating FCNR redemptions. Why is there a gap in these 2 months?
I don't know. I don't know that that is a fact. Besides, that is just some information from certain banks. Nobody really knows what the story is. Really what we need to look at is, rather than the why, what would be the impact, correct? Now, one of the things that was quite significant to me was last week or 2 weeks ago, we saw that the reserves had fallen quite sharply, I think by $4 billion. So clearly, RBI was using its reserves to settle certain liabilities, which could be, for example, unhedged FCNR exposures. My personal belief is that if there is extra demand in the market created, let's say, by these unhedged exposures, it would, and if they were not filled from the reserves, it would actually pull the rupee lower. Now, I think that would be a good thing, because exports, while they showed a little pip up, they've been struggling. We talked to a lot of companies, and global markets are still very difficult. And a lot of companies need more. Many of them are actually, certainly in sort of traditional areas like garments, they're really flat on their back. Now, it is not the government's job to support X or Y or Z industry, but I think it does make sense to have a focus on what is the most efficient exchange rate for the economy. See, clearly, if you are consistently running a trade deficit, as we do forever, right, it's not a bad thing, but right now the difference between, exports and imports of goods, the gap is very, very large. It is largely filled by services exports and remittances and, of course, FDI. So I think our companies are really a lot of companies are under pressure. Also because, for example, in the domestic market, they have to compete with imports from China. So my personal belief is the rupee should be lower. RBI doesn't seem to share that belief. And unfortunately, they're in charge and not me.
Right. Jamal, I'll come back to you. Just a little detour. Ultratech's earnings are flashing in front of your screen on a standalone basis. We have profit after tax of 601 crore rupees versus 547 crore rupees. So on the bottom line, there seems to be a performance which is better than anticipated. The top line was seen largely flat. We'll also wait to watch what the volume numbers are, because we were expecting volumes to dip in the same period when compared to a year ago period. The second quarter is weak. But going back to our discussion on the currency, Jamal, we need a competitive, rupee for exports to be able to thrive. And you spoke about the dip in the foreign reserves. Now, the FCNR issue, the redemptions, have been going on for some time. Do you see pressure on the currency, not just because of the FCNR redemptions, but because of the fact that the equity market's a little weak and liquidity may also tighten going ahead? So if there is compounding of few issues, do you see the rupee coming under a lot of strain?
I just answered that. Basically, I was saying that if it is not filled by the reserves, of course there will be pressure on the currency if there's extra demand. And I think it's a good thing. And that's just what I said a little while ago.
And but the reserves are enough. We have like nearly $350 billion in reserves. So, the volatility should be managed easily, right?
Well, I'm saying the reserves are plenty, but I'm saying volatility has been too low for too long. And I think part of the problem, is, I've been in this business for years, and since 2003, I've written several columns titled, same title, Fear of Volatility. And I think RBI believes somehow that reducing volatility is actually good for the economy. And I'm not making a case that you need huge volatility, but I feel there is such a thing as when volatility gets too low, companies then, people with imports, people with loans say, why should I hedge? So you get set up in a situation where if there is a global problem or a blowout or anything, any major issue, your people are left holding the baby, So I think it's important that volatility just as volatility should not be too high, because that's very difficult to live your life, I think volatility should not be too low. And I think that is part of the problem we have right now, that volatility has been very low. So now what happens, a little bit of a move, up by 15, 20, 30 paisa, everybody starts getting a little edgy. I'm saying markets, the nature of markets is they should move. If they move even by 50 paisa or 1 rupee in a day, that's hardly a big deal. It should not be a big deal. But because we've been so quiet for so long, when the rupee went, it was maybe 66.50, went up to 66.85, and all the media and everybody was getting upset. A normal market, that is not a major move, right? So I'm saying currently we have a constrained market which has lots of issues.
But there are factors behind why the rupee has been as stable as it has, and this has got a lot to do with the portfolio investments coming through. You said that we've been having a trade deficit for the longest time, but then there are a lot of other issues to consider, like the RBI and rate cuts. Now, how much rate cuts would be possible now if you want to keep on attracting investments when the US is looking at higher rates? What kind of vulnerability then exists for the rupee and the volatility that you expect?
Well, I think, hopefully, I think the U.S. will certainly raise rates probably in December. And I think that we're already seeing, if you look at what's happening, the dollar has already started strengthening in anticipation of these rate cuts. But the rupee has not been weakening in sync. Other currencies, and I think the dollar is very close to a takeoff stage, in my view, globally. Now, when that happens, hopefully the rupee will respond and fall, because if it doesn't, and other currencies which have a little, shall we say, a less constrained domestic market, if the dollar goes up, other things go down. Now, if other currencies, let's say the Thai baht, etc., fall, then our competitive position changes. In any case, as I said, one of the big problems is China, as always. And yuan is certainly falling right now. So I think RBI, the reason our currency has been so stable is because RBI has been trying to constrain the volatility. And I think they need to, open up a little bit. I think it would benefit pretty much everyone.
Right. Jamal, can you give us a range for the currency that you're looking at, say by the end of this calendar year, by say December this year?
I never give forecasts because, nobody really knows what's going to go on, what's going to happen. On a long-term basis, I think that since there are lots of clouds in the global economy, negative interest rates carrying on for so long, equity values very, very high. Now it looks fortunately like Mr. Trump is not going to show up. That would have been another big risk. So I'm saying the risk is on the downside, So, and the rupee, if there is a major blowout, and let us say it happens more or less at the same time that these FCNR redemptions are there, you could see the rupee fall quite sharply. But in terms of, but it's not going to stay low because India is doing quite well. We're really, I think the government, for whatever its ills, it's certainly doing lots of things correct structurally, which is the right thing, which is really what we need to do, is keep trying to strengthen the economy. I'm a little bit concerned that it's appearing that the RBI is coming too strongly under the government swing, and global investors may not be too happy to see that. But I think fundamentally the rupee, which has been running between, let us say, 66 and 67.50, it ideally should move up a notch. Let us say 67.50 to 69. Now that would be a range, but obviously you would move on both sides of that range. But I think if that were to happen, I think we'd be, exports would pick up, domestic growth would pick up, which is ultimately the key.
All right, Jamal, thank you so much for speaking with us at NDTV Profit, giving us your views on the currency markets and the dynamics working there.